Hey everybody, Economic Ninja here. We're going to be talking about real estate. We're going to be talking about commercial mortgage-backed securities. If you haven't been following my channel long, I came out with this story in the beginning of August before the Evergrande story broke, talking about CMBSs and how everybody, even though you don't know what it is now, is going to become a pro by January or sometime in January, because I believe you're going to see commercial mortgage-backed securities start to really tank. I was following real estate back in 2004, 2005, saw the crash forming in the mortgage-backed securities market in real time, liquidated my portfolio of real estate, closed my real estate flipping business, and watched the dominoes start to fall. So here we go. I'm going to do this story, and it's going to be interesting. There's a couple points I want to make out, and I think it's really important. This story just came out yesterday. I'm going to link the article below. By the time it gets to you, it's going to be 2 days old. Okay. It's entitled "Montgomery Mall Sells for $55 million in a Foreclosure Sale." So now it's no secret that malls are hurting right now. If you walk into any mall in America, you're going to see doors closed. You're going to see empty stores because, quite frankly, business activity has been horrendous the last couple of years. The swings in the economic climate for malls has been just absolutely horrible. Especially, it's one thing to say that online sales are dominating and we're going to see, less and less brick and mortar real estate, businesses and more online e-commerce style sites. That's one thing. But in the last couple of years, with what's been going on with the world dealing with this situation, let's call it, and the wild swings of inventory, the inability to get qualified or anybody to employ at your store is an understatement. This is just absolutely historic, right? So we're going to see more and more of these now. But what's really interesting is we're at the beginning of this trend. And here it goes. It says Cohen Real Estate Investment Group of Great Neck, New York, has purchased Montgomery Mall in a foreclosure sale for $55 million. Now, this is interesting. The sale price is 95% of the property's appraised value as of August of $57 million. Now, that's an interesting thing. So let's break that down real quick. So that would say, oh, it's not that bad. They almost paid full price for it, right? But first off, I want you guys to realize that was appraised 8 weeks ago for $57 million. And now it's 55. So I wanted you to understand that too. It's one thing to say you bought it for close to its value, but I think values are falling fast. And check out this next sentence. In 2014, the mall had been appraised at $195 million. So from $195 million in 2014 to now, this last August, a mere 8 weeks ago, let's say, it has lost a ton. Three quarters of its value? It is lost. All right, and it's slipping fast. I would dare say that this property will be worth $40 million at the end of January, and the reason why is look at this number right here. When it appraised at $195 million in 2014, that was equal to $176 a square foot. Remember, guys, when we talk about appraising businesses, especially malls, it's based on the rents, and the foot traffic is what builds the rents either higher or lower. The lower the foot traffic, the less the rents get charged, because businesses are like, well, why would I pay X amount when I'm getting 50% of the foot traffic that I'm getting on the other side of town or in another city. All right. So the rest of the story is how they're talking about, the property fits into their retail focus. It's going to be, it's a good, feel good story. Like, hey, yeah, it's a foreclosure sale, but guess what? It wasn't like the property values plummeted, but actually they are plummeting. Literally, the property lost, from 95 to, from 57.5 to 55. It's about a 5% drop in 8 weeks. That's gnarly. I'm not going to lie. That is bad. Oh, we should go back and find out in the end of January. I bet you I'll be right. It'll be worth $40 million because businesses aren't rebuilding. I hate to tell you the honest truth. And this would be a great time to plug this. If you guys haven't subscribed to the channel, please do so. If you've been watching these videos, please subscribe or throw a thumbs up, because I think this is very important, because as we're documenting the collapse, and we are in the next big economic collapse right now, worldwide. I'm not even joking. I'm talking Great Depression levels. We're in it right now. And it's important to see these numbers and keep reiterating the downfall, because what it does is it reiterates the need to be financially prepared. And if you don't know how to do that, I've made 800 videos this year. So there's tons of content to check out. But check this out. Let's do this. The sale brings to close a saga overshadowing the regional mall that began in August of 2020, when a $100 million loan backed by the property was nearing default. By last November, an entity affiliated with Simon Property Group, which owned the mall, notified the special servicer overseeing that loan that it was unwilling to inject additional funds into the loan, but is willing to manage the property. Okay, let's see. It talks about, in June, the property was foreclosed upon. A $118 million judgment rendered against the mall, Simon affiliate, that the mall was placed in receivership. At the same time, the judge approved putting the property up for sale. Now, $118 million, I don't think it says, $100 million loan, okay? That was what it was. So if you think about it, and CMBS's, commercial mortgage-backed securities, are in just about everybody's pension funds, okay? It is a massive, massive deal. And so at one point, there was a $100 million loan that's sitting in a bunch of pension funds that these mall operators are paying on, and now that literally got cut to $57 million. So think about that. I mean, that is absolutely massive. A 50%, or just about 50%, like, was it like 43%, rounding Economic Ninja numbers. That's huge. And it says right here, the property went through 2 rounds of bidding before a buyer was selected and approved. The retail center sits on nearly 105 acres and was 72% at the time of sale. Oh, sorry. Okay. This has nothing to do with it. My point being is this. I'm going to end on this. Guys, retail is getting slaughtered. Commercial real estate is getting absolutely hammered, and it is in everybody's pension funds, or just about everybody's pension funds. Realize this, and realize that these are little chinks in the chain, or little cogs that are fitting together, and the teeth are starting to break. And after a while, if you miss enough teeth in a cog, the machine can't run right, because then the cogs just spin. They're free spinning. So these are the things that we need to be aware of, and to start to prepare, shore up our finances. The system is breaking down, and it's breaking down fast. And the story out of China with Evergrande is just yet one more example, and that is a big deal, that commercial real estate, at least for now, is not the place to be. All right, guys, I hope you got something out of this, and thank you for your time. The Economic Ninja is out.